Have you ever wondered why, despite the market looking pessimistic, the price of Bitcoin continues to rise? With a price above $65,000, Bitcoin is showing surprising resilience. But what is behind this movement? And why could this be just the beginning of a bull run that could get really crazy? Today, we'll explore the forces at play, from the movements of ETFs to the moves of financial giants like BNY Mellon to the changing global attitude toward cryptocurrencies. Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. Let's start with some context. BNY Mellon, the world's largest custodian bank, was authorized to offer custody services for Bitcoin and other cryptocurrencies under SAB 121. This is significant, as BNY Mellon manages $2 trillion in assets and has nearly $50 trillion in custody. Now, it can directly compete with Coinbase for crypto ETF supremacy. This competition could lead to positive developments for crypto investors and early adopters, like us. In addition, the data shows a growing demand for Bitcoin. For example, this week alone, spot Bitcoin ETFs purchased 17,000 Bitcoin, while miners produced only 2,250. Demand is outpacing supply, which is an extremely bullish sign for the future of Bitcoin. Another interesting aspect is the boom in ETFs. Ethereum, for example, has seen record inflows into its ETFs, with BlackRock surpassing $1 billion in its spot Ethereum ETF. This massive movement of capital into cryptocurrencies like Bitcoin and Ethereum not only highlights the growing confidence of institutional investors, but also signals a structural shift in global markets. BlackRock's head of digital assets recently pointed out that the world is moving towards Bitcoin. The central argument is that Bitcoin, as a decentralized asset with no counterparty or country-specific risk, offers an attractive solution in a global context characterized by economic uncertainty and concerns about the devaluation of traditional currencies. But what does Bitcoin look like to traditional investors? For many, it remains a difficult concept to understand. Its volatility is high and its use as a means of payment is still limited in many parts of the world. However, from an investment perspective, Bitcoin is increasingly seen as an emerging global monetary alternative. With unique characteristics, it is scarce, decentralized and does not depend on any government or central bank. This makes it particularly attractive in a world where there is growing concern about inflation, sovereign debt, and the sustainability of fiscal policies. As BlackRock noted, many investors see Bitcoin as a hedge against these risks. If we look at history, we can draw an interesting parallel between the 19th century physical gold rush era and the current cryptocurrency era. In the 1840s and 1850s, physical gold represented one of the greatest opportunities for those looking to get rich quick. Today, in 2020 and 2024, we are witnessing a crypto gold rush, where Bitcoin and Ethereum are emerging as the dominant assets of the new digital economic order. Michael Saylor, CEO of MicroStrategy, recently stated that Bitcoin is the ultimate exit plan, describing it as the strongest asset in the world. Bitcoin is now a trillion-dollar asset class, comparable to giants like Apple and Google. However, unlike these companies, Bitcoin is not a company, it is a decentralized system that can house trillions of dollars in capital. Bitcoin is not alone in this race. Ethereum, Solana, and other cryptocurrencies like Cardano are thriving. Cardano, for example, recently celebrated its 7th birthday, proving its resilience over time. However, the long-term success of cryptocurrencies will also depend on the policies adopted by governments. There is a growing awareness in the United States that the country risks being left behind if it doesn't move quickly. Senator Cynthia Lummis recently pointed out that the European Union has already effectively regulated cryptocurrencies, starting in January 2023. If the United States does not quickly update its policies and rhetoric, it risks missing the crypto innovation train. The problem in the US is that the SEC, the market regulator, has taken a regulatory approach through enforcement, rather than setting clear rules for the industry. This has led to numerous legal battles and uncertainty, discouraging innovation. However, the world is moving forward. Singapore, Hong Kong, Abu Dhabi, and the European Union are already embracing cryptocurrencies, while the United States continues to debate. Regardless of whether the US adopts a pro-crypto policy or not, the world is set to become increasingly decentralized. Politics could play a crucial role in shaping the future of cryptocurrencies. Cardano founder Charles Hoskinson recently stated that former President Donald Trump could be the best candidate for cryptocurrencies due to his favorable stance. However, this does not mean that Trump is not taking advantage of the situation opportunistically, with his NFTs and decentralized finance, DeFi, projects. Ultimately, politics is always about compromise and coalitions, and while some leaders like Senator Tim Scott and Senator Cynthia Lummis are open to fair regulation of cryptocurrencies, there is still a generational divide within the Democratic Party, with older leaders less likely to support the crypto sector. In conclusion, Bitcoin is facing significant resistance around $66,000. If it can break above this level and reach $70,000, we could see the price push up to $80,000 or even $100,000 by Q1 2025. Of course, there is always a possibility of the price falling to $53,000, but the long-term trend remains bullish. With that said, thanks for following us this far. Don't waste your next crypto flight. Thanks for being with us. If you want to stay updated on the latest news in the crypto world and not waste a crypto adventure, hit that follow button and activate the bell. Ready to go? Then see you in the next video.